Ladies and gentlemen, boys and girls, thanks for joining us on this Black of Black Mondays here. Today is January 24th, and if anybody was paying attention to crypto over the weekend, you probably have a little bit less money today than you did on Friday. Over the weekend, a number somewhere between $200 and $300 billion of total value was wiped out from the market, from 1.9 down to 1.6 trillion. Crypto is no longer a $2 trillion asset class. And if anybody out there needs a little bit of crypto therapy today, we are happy to provide it to you in the form of Mr. Bill Noble, who has been around the block in the equities markets. He knows his way around crypto as well. Your episode today, you got Bill, Jacob, and Steven, and we are just basically here to listen to Bill tell us it's going to be okay. Bill, what do we need to know about what's going on now in the crypto markets versus what happened in 1987 in the equities markets?
Okay, so this is a question that I think is going to eventually get picked up by the mainstream media. In 87, you had trade tensions. You had a massive real estate bubble in Japan, just like the one you have in China. And in 87, you had a modest inflation problem and skyrocketing interest rates. Today, you have a, skyrocketing inflation and a modest interest rate problem, at least for now. Now, in 87, young Fed Chairman Alan Greenspan came out and talked really tough on inflation. I believe the U.S. long bond hit 10% in yield. That triggered a 30% stock market correction, most of which I believe was done all in one day on October 19th, 1987. Now, in that case, really all stocks did was do what's called mean reversion, which is kind of just find the FOMO faded out and it went back to its 200-week moving average. It doesn't look like anything on the charts, but I was in college at the time and I actually saw it on TV and started packing my stuff to go home because, I thought it was the end of the world and, my father wasn't going to be able to pay there was no way to pay my tuition. So that's the level of despair that happened back then. Now, will that repeat itself? Well, it could. Remember, the Fed is going to talk on Wednesday. Vapor stocks that are in Russell 2000, I know they're down 20%. I know ARK investments like, highly speculative. The altcoins of the equity markets are down a lot. But I don't think it's a reasonable expectation that the Fed is going to save the markets. Now, crypto's already down a lot, but I don't think anyone is necessarily prepared for what I call event risk. Like people are resigned that it's a bear market, kind of arguing more it's kind of like a crash. Right.
Yeah. So can we talk to us a little bit about the difference between a bear market and a crash? Because what happened over the weekend was a crash, correct?
Yeah, that was, I viewed it as the start of a crash, right? In other words, in a bear market, bear markets have, periods of years, right? It kind of goes down, it goes dormant. That's a bear market. Now, that could happen, but this to me feels more like a crash. In other words, it goes down, and everybody goes, oh God, I can't be short. And then it goes down more. And then, I'm hearing stories like, we studied on-chain data over the weekend. People are buying the dip and they're buying the dip with leverage. Leverage traders, I don't know, maybe they got washed out early today, maybe not. In other words, everybody who's bought Bitcoin since December 2020 would be underwater below 30K, right? So, crashes involve panic. There's all this geopolitical tensions. Panic is possible, I guess, is like, the theme.
Now, Bitcoin has been through more than a couple crashes before. It's been through a 50% crash. It averages about one of those a year. It's been through a couple 80% crashes. Now, some notable numbers I would just like to point out is that all bear market bottoms, the macro bottom for Bitcoin, has occurred between 29 and 35 values for the weekly RSI. At the moment of recording this podcast, I believe Bitcoin is at about a 37 value for RSI. You said just before this on your live stream that in a further impulsive crash, Bitcoin could go down to as low as 24K and then even as low as 19.2K. So these are really big movements for Bitcoin. A lot of people are feeling like the bubble has popped, and it is, like what you said before, the end of the world. So it's interesting. It's interesting to hear from somebody that has been in the market longer than me, who has come in about 2020.
Right. And the end of the world feels different in different eras, right? I don't think this has the end of the world feel to it. And I just want people to know that, protecting your capital, Dylan mentioned cryptotherapy. The most important thing you can have is your capital and your sanity, right? So if the market goes up, don't FOMO in, because a lot of people FOMO'd in Sunday night at 6K when equities opened up higher. Everyone
Myself
FOMO'd
included.
in. Right.
I bought a bag of Chainlink last night expecting a rebound.
You know what? And it's totally understandable. It's hard. It's hard to resist those instincts. People who make money in bear markets, they're guys from Bensonhurst, Brooklyn. They wore red shirts and white ties. They're like pirates with an eye patch. You have to have a certain mentality to profit from a bear market, because bear markets are that ugly, right? The bulls lose money, right? And the bears lose money, right? Because they get stopped out. That when you bought the Chainlink, that was on a rush of people, bears and shorts getting stopped out, right? So at that moment, the bulls were out, the bears were out. Okay, so I don't want to prattle, but
Well, let me tee up with another question,
Yeah.
Bill. What's the move? It's nice to understand why a crash happened, but what's the move? How do you deal with the reality of a crash right after it? Let's immediately talk to some people out there who are feeling the pinch from over the weekend, who
Right.
might not totally appreciate that markets move in cycles.
Yes, right. So this is a good point, right? I think the move is to be real about why you got into a project and ask yourself on a rally like the one we're experiencing while this is recording, do I want to stay in that project? What was the reason why I got into it? Did I FOMO? Did I research it, etc.? So raising capital on rallies. Then at the end of the crash, when it really looks like the world is, potentially, there's a gigantic problem, that's when you want to actually put some money to work. And I think that may occur more towards the end of the week, right? In other words, it might not be a Black Monday, but it might be a not so good week. So the move is to deploy capital when people are panicking. And I don't think people are panicking yet.
I do think there also is a silver lining to this correction in both equities and the crypto market. Is we saw last week investors put $14 million into crypto related funds. So it was the first inflows in 5 weeks. And this was mainly into Bitcoin related funds. There's outflows of Ethereum, but that is a good sign when we see 5 weeks of money leaving the crypto market. And then this is the first start of the week where people are putting money back in. And this also occurred late last week. So this is also connected to the crash. People were buying the dip, like we saw the president of El Salvador buy the dip. But yeah, I think that is a silver lining.
Yeah, silver lining is that people with not a lot of money can get a lot more crypto for their buck today and possibly throughout the end of this week, right? In other words, crashes are good in that they purge excess. Because one thing about 87 that no one knows is that the low in October of 87 was like a generational low. It was a generational low. They never saw those prices again. And it just started trending higher all throughout the 80s and the 90s. So, if I talked about Bitcoin at 25, or if I talked about, 30, or a retest of 20K. I mean, 20K was the biggest level in the history of crypto until it wasn't, right? So, a cleanse, a pause that refreshes, allows lower income people to get more crypto for their money.
Yeah. Now is probably a great time to remind our audience that this podcast is brought to you by tokenmetrics.com. If you need a roadmap, if you need help figuring out how to make money in a weird, frothy market as we've experienced over the weekend, then check out tokenmetrics.com. Token Metrics subscribers who are following our daily indices know that about 4 or 5 days ago, most of those indices would have had you in cash. If you were blindly following those AI generated indices, you would have effectively sidestepped this speed bump here. I don't know. Maybe somebody else has something else to say about that.
Token Metrics called the Bitcoin top at 53K.
Yeah, a little bit.
That.
A little bit.
Yeah.
I'll just butt in here and give a little more market analysis. About a week ago, 40K was the new 30K. Now I hear from you, Bill, 20K is the new 30K. You're saying that we could go all the way down to 20K, maybe hit 19 and then bounce back up like what we saw a year ago, except the bottom ended up being 30K.
Right. So that's a good point. One thing that people do forget about is, whether the bottom was today or whether the bottom is at some lower level, once sort of the purge happens and real panic sets in, bear market rallies can be powerful, right? That's why when things look the darkest, you want to have a little bit of money to put in. I don't think you buy small dips, but if you saw something dramatic like 30 or 25, those are levels to think about getting involved. Because when markets they sort of, it's like a night of drinking, right? Once you just sort of like let it all go, things get better. So I don't want everybody out there to think that we're down on the mouth on crypto, but sometimes markets just need a little purge.
Yeah, they need breathing room. I think it's also important to note, like personally, I'm a value investor, so when I see good deals, I pounce on them. So for example, last July, Ethereum went down to 1,700, Bitcoin hit mid 29K. And I saw that, and I'm like, okay, in 5 years from now, is this going to look cheap? And I remember talking to my friend, and she was like, it had got Ethereum, for example, had gone up from 1,700 to 2,100. And then she was like, oh my God, well, there's a $400 difference. But I'm like, yeah, well, when Ethereum's at 10K in 5 years, that $400 difference isn't going to be that much. And now she's glad she bought it when it was 2,100, because now it's sitting at what?
Right. So, I mean, the one good segue on that is, if you value invest, right, and you think about, no one's going to care, like say there's a Q4 recovery, no one's going to care whether you bought it at 25 or 19 if it's much higher at this time next year, right? So you do have to think about the big picture, but you just have to manage your capital and your sanity, right? In other words, if you're gonna buy a dip, make sure that it looks like the sky is falling before you do so.
Yeah. What specific cryptos seem like a good buy right now in the wake of all this market carnage? I know that personally speaking, I'm looking to reduce my cost basis on stuff that I'm already in, which I don't want to speak for Bill. I suspect you endorsed that, Bill, using this as an opportunity to reduce your cost basis. Yeah. But what about any fresh positions that someone might want to open from scratch right now?
Well, I mean, there's Cosmos, which both you and Mehdi were on, in terms of like layer 0 protocols and connectivity between blockchains. Things like Matic and other layer 2 solutions, there's going to be a whole broad spectrum of those. In other words, layer 1 may be over-owned, layer 0 and layer 2 may be under-owned. So naturally, stay tuned with tokenmetrics.com to find out what projects those are. But if the world is a little bit too long, ETH, Solana, AVAX, and Phantom maybe, then there are other projects like Near, for example, is a layer 1 with layer 0 properties. So if Near went from 6 to 19 and then goes from 19 back to 7 or 6, then that's a possible dollar cost averaging process, that you might want to take advantage of.
Now, guys, there is one all-time high happening right now, and that is the Bitcoin hash rate. That actually did, in the past couple of days, hit an all-time high. So Bitcoin as a monetary network is healthier than ever. Altcoins are still getting wrecked, and Ethereum is still getting wrecked because they're not complete yet. Ethereum specifically is getting wrecked because of worries about its 2.0 upgrade and whether gas fees will ever go away. But I just want to know some thoughts about Bitcoin mining. What do you guys think about that? I mean, it's healthier than ever, and gold is going up right now. Commodities look like they can go up. Is Bitcoin mining a commodity, or is it speculation? Hard to say.
Well, I mean, I think with miners, I think the key question for miners is when you look at like Riot Blockchain or, any of the publicly traded firms that do mining, the question is, are they going to have to sell Bitcoin to finance inventory or to build inventory or pay bills? In other words, one of the big questions in Bitcoin, which we'll cover probably in future episodes, is for every publicly traded Bitcoin firm, from MicroStrategy to Riot to even Tesla, right? What is the point where these big firms, miners, what is the point where they sell, right? Are they just going to never sell? Or is there a point where, they may have to get out? Because that's what created the carnage in 2018. So I think when you talk miners, you've got to start looking, at MicroStrategy and Bitcoin mining stocks.
Which look bullish or bearish for you?
Well, I mean, right now it's tough to say anything with the market kind of cascading lower, right? I think what you have to do is, believe it or not, you don't know whether it's bullish or bearish until you actually dive deep into their financial reports.
I see.
Right? In other words, it's not a chart thing. It's what's the average price where everyone's bought Bitcoin. Like, for example, we looked at some on-chain data over the weekend, and all short-term traders or investors that have bought Bitcoin in the last 5 months are now underwater, right? So, if you start thinking about it that way, you start saying, okay, well, where's the retail point of pressure? And then you're also going to have to, it's going to take some math to figure out where the institutional point of pressure is.
That's the $1 million question right there.
Right. I mean, is Elon going to hold or is he going to sell?
Oh, save us, Father Elon.
Yeah.
Guys, you've been watching a podcast called Engine Room. We are here for you 3 days a week to help you make money in crypto, help you sort signal from noise. If you like what you're watching, leave a comment on this video, subscribe to Token Metrics on YouTube, and you can also find the audio format of this podcast everywhere you listen to your audio podcast. Just search Engine Room Crypto Podcast and click subscribe. From all of us here at Token Metrics, I want to thank you for listening and watching, and we'll see you next time.